Hello and welcome to another edition of CMS Forex News. This is Andrew Pang and today's Friday, October 17, 2008. In Japan, a measure of sector output declined for the first time in 2 months. The tertiary activity index fell 1.4% in August compared to July's 1.2% increase. Weaker spending reflects consumers facing worsening employment and sluggish income growth. Add to that the turmoil in Japanese stocks, and it is apparent that the economy will face a tough road in turning in a positive third quarter. In Australia, import prices for the third quarter were shown to have increased 5%. We saw that at the beginning of the month that the TDMI inflation gauge rose in September, hitting an annual rate of 4.5% again. With banks cutting rates as well, today's report will only add to inflationary pressures going forward. The Aussie-Yen pair finished the week where it started, with increased risk appetite and a rise above the 71 level. The middle of the week saw sharp stock decreases around the world, which pressured the pair, but yesterday saw the start of a rally in the pair. Despite a pullback overnight, a pickup in European and U.S. stocks helped the pair to resume its uptrend. In Europe, the trade deficit narrowed to 6.1 billion euros, but undershot expectations of an even smaller number. Both imports and exports fell, but imports dropped by a larger amount, improving the trade balance in the Eurozone's favor. The euro-dollar pair has been trading sideways the past 2 sessions, showing consolidation. Drawing lines of support and resistance originating from last Friday's low and Tuesday's high, we see a triangle pattern emerge. The euro-pound has also fallen into consolidation this week, bouncing between 0.7750 and 0.7850 after Monday's sharp fall in favor of the pound. The recent financial turbulence has brought the pair up to 0.8050 in last week's trading, but now traders pause as they gauge to see what actions will be taken by the ECB and the Bank of England. In the U.S., housing starts fell to their lowest level in 26 years in September as the annual pace fell to 817,000, far below forecasts. The data suggests that the real estate slump continues and may put a potential bottom further away. The one bright note is that fewer starts should thin out unsold inventory. Building permits, an indicator of future construction, tumbled 8.3% in September to an annual pace of 786,000. Consumers' views on the economy deteriorated sharply in October, the mid-month measure of the UMich Consumer Sentiment showed. The overall index declined from 70.3 to 57.5, its steepest one-month drop ever, and is now at its lowest level since June of this year. Both current and future expectations slid, and the 12-month inflation gauge rose to 4.5% from 4.3% in September. Despite the weaker U.S. data, as we mentioned before, U.S. stocks were up on the day after opening negative. The Dow Jones Index was up 200 points by 2 p.m. Eastern, and the Nasdaq and S&P were trading modestly higher, and oil prices were up $4. The increase in risk appetite helped the greenback pare its overnight losses to the yen, and by 2 p.m. it had reclaimed the 101.80 level seen at the end of yesterday's global session. Next week starts with housing price data from the UK and PPI and CPI data from Australia. Monday we'll see Bernanke testifying in front of Congress, while on Tuesday the Bank of Canada will decide on interest rates. Policy members are expected to cut rates 50 basis points to 2% from the current 2.5%. And that wraps it up for the week in Forex News. Tune in next week right here at cmsfx.com.